Hey everyone, welcome back to Corporate Decoder. Today RAAQW just filed a Form 8 and I'm spotting a crucial update that could reshape its future. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is moving forward with a big merger, and a key executive appointment might signal their strategic direction. Alright, let's dive into what Real Asset Acquisition Corp, or RAAQ as it is known, has just reported they filed a Form 8K, which is basically a report for significant events that shareholders need to know about right away. The big date here is the 12th of June 2026. This is when the main event that prompted this filing happened. RAAQ is a special kind of company, technically called a Special Purpose Acquisition Company, or SPAC. These companies are formed to raise money through an initial public offering, or IPO, with the sole purpose of merging with another company to take it public. Think of it as a shell company looking for a business to buy. They have different types of shares, including Class A ordinary shares, which are the common ones, and then there are also redeemable warrants. These warrants give the holder the right to buy shares at a specific price later on, and they are often part of the package offered when a SPAC goes public. These warrants are quite specific. For every whole warrant, you can buy one Class A ordinary share for $11.5. This is important because it sets a potential price ceiling for the stock if a lot of warrants are exercised. Their securities, like the units, ordinary shares, and warrants, are traded on the Nasdaq stock market, LLC. This means they are subject to Nasdaq's rules and regulations, which adds a layer of oversight. The ticker symbol for their units is RAAQ. The ordinary shares themselves trade under RAAQ, and the warrants we talked about are traded under RAAQU. You might see RAAQ mentioned a lot in the recent news, sometimes with price movements. For instance, we've seen news about RAAQU warrants rallying on speculative interest. Looking at the context, RAAQ's current price is around $1.3, but it's 52. Weak range has been from $2.85 to $3.27. This suggests a significant drop from its highs, which is common for warrants as time passes, and the underlying business doesn't move as expected or the merger deadline approaches. RAAQ has checked the box to be considered an emerging growth company. This status comes with certain regulatory benefits like advantages in reporting financial information to the SEC, which can ease the burden on smaller, growing public companies. Now, let's get to the meat of why they filed this form, which falls under other events. This is where the really significant news is usually found. The main story here is a business combination agreement signed back on the 22nd of February 2026. RAAQ is merging with a Finnish company called IQM Finland Oy, or IQM. Basically, RAAQ is merging with IQM to take IQM public. This is the core purpose of RAAQ as a SPAC. It means IQM, which seems to be the operating business, will soon be a publicly traded company. The specific event reported on the 12th of June is that IQM announced a new addition to its board of directors, Barbara Veneman. This type of appointment is often a signal about the company's strategy or its approach to governance as it prepares to be a public entity. Bringing in experienced board members can enhance credibility and oversight. The filing also includes important information for investors, pointing them to a registration statement and a definitive proxy statement to prospectus. These documents are filed with the SEC and contain detailed information about the merger, the companies involved, and what shareholders will be voting on. It is crucial for investors to read these materials. This section usually details who might be influencing the vote on the merger. It is important for investors to know which individuals and entities are involved in urging shareholders to vote in a certain way. This is a standard but critical section in any filing. It contains forward-looking statements, which are essentially predictions or projections about the future. These are based on current beliefs and assumptions, but they are inherently uncertain. The company explicitly states that these future-looking statements are based on estimates and assumptions that, while believed to be reasonable by management, are inherently uncertain. This is a big disclaimer. This is a long list, but it covers what they expect. They're talking about market share, customer growth, new product launches, costs, timelines, and how they plan to use the money from the merger. They're also focused on their intellectual property, so that is a key area for them. They're also very excited about building what they call sovereign infrastructure that will allow quantum ecosystems to grow. Quantum technology is a very cutting-edge field, and companies in this space often have long development cycles and high hopes for future value. This is a really important point. They are directly telling you that real-world events are hard to predict and will likely be different from what they are assuming, and many of these events are outside their control. And here is the direct warning. These future statements are subject to risks and uncertainties that could mean the actual results are very different from what they are predicting. This list of risks is extensive. They admit they are working with an emerging technology that has big technical hurdles and might not even be accepted by the market. They also mention net losses and a short operating history, which are major red flags. They're dependent on their management team and partners, and they are exposed to risks from government contracts, cybersecurity, and changing regulations. A huge risk is that shareholders might redeem their shares, leaving the combined company short on cash to operate. This is a common concern with SPACs, as many investors put their money in expecting a certain outcome, and if the deal looks shaky or other opportunities arise, they'll pull out their cash. They are also making it clear that their current assessments might change later. This means what they say today could be very different tomorrow. This part is a legal disclaimer. It states that this report is not an offer to sell or buy securities, and it is not a solicitation of votes for anything. It is basically saying this document is for information only and not a recommendation to invest. Finally, under financial statements and exhibits, they list out the documents attached to this filing. The most important exhibit is Exhibit 99.1, which is the press release dated the 12th of June 2026. This press release would contain the official announcement about Barbara Venneman's appointment and likely more details about the merger progress. And Exhibit 104 is the cover page data, which helps in searching and analyzing the filing digitally. Now, looking at the bigger picture here, this filing is all about the merger between RAAQ and IQM. The key takeaway is the appointment of Barbara Venneman to IQM's board, which is an operational update for the company that is about to go public. IQM is focused on quantum technology, an area that is very exciting but also very risky. They admit to having net losses and a limited operating history, and they are relying on future technological breakthroughs and market acceptance. The fact that RAAQ warrants RAAQW have dropped significantly from their highs suggests that the market may be getting nervous about the deal or the underlying business prospects. Also, with institutional holders like Fort Baker Capital Management and Saber Capital Management having substantial stakes, their sentiment could heavily influence the stock. The risk of shareholder redemptions is a major concern for SPACs, and if many RAAQ shareholders decide to get their cash back instead of going along with the merger, IQM could end up with much less funding than planned, which would severely hamper its ability to execute its ambitious plans in the quantum space. The big unknown is whether IQM's cutting-edge technology will actually pan out and find a market willing to pay for it, and if they can manage the massive cash burn that often comes with advanced tech development. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.